Well, my view is like 10 to 15 trillion for this cycle. And I think that's what also drives the emotion of this space as well, is people realize there's no other thing like this. Holy shit, if this is the case, then we have the simplest, easiest risk-taking opportunity of all time. All of us, in fact, spend a lot of time on Twitter and other platforms looking for signal. But as we know, there's a huge amount of noise out there. It's really difficult to understand. Everybody's hopes and dreams, fears and excitement are all played out in real time. And it's kind of emotionally overwhelming, or just overwhelming overall, to try and understand what is the bloody signal. Anyway, when it comes to signal, there are few people that I really take seriously. Thoughtful, intelligent people who spend time thinking about what they're going to talk about or how they invest. One of my absolute favorites is Chris Burniske. And I think you would massively benefit from hearing me sit down with Chris, where we can talk through what are the opportunities in crypto? Where are we?
I suppose most people always want to know, where are we in the cycle? And to use a baseball analogy, I would think of it for crypto, late third, early fourth inning of, 9 innings type of thing. We're really focusing on growing value within the existing portfolio. We did a ton of investment work in the second half of 2022 and all through 2023. A big focus for us was Solana, and that was both Sol itself, but also underwriting every quality venture team that we could. There were things like when we underwrote Tensor, I started speaking with the Tensor guys late in 2022. So, you've gone through the Luna meltdown, the FTX meltdown. No one wants to touch Solana. Here, a founding team of 2 has built probably the most feature complete, amazing NFT exchange I've seen. And there's no VCs around it.
And so everything got marked down. Everything got super cheap and really interesting. I don't know why people don't learn this. I mean, even now, you just see even VC funds can't raise money yet. And they'll really raise money when they get, let's say, Bitcoin's over 100,000. And before you know it, everyone's investing in the late cycle all over again. They just rinse and repeat. My view on this is, the issue is even Bitcoin alone performs at 150% a year since 2011. And the earlier stage, high adoption tokens, Solana, Ethereum, are much higher. So the amount of new capital and wealth it creates just means this endless capital gets recycled into the system. And until you see network growth slow down, and we're barely there yet, we're only still going up the exponential curve, it's difficult to think we can get capital efficiency.
We are seeing right now is way more dispersion in how assets perform than any other cycle, right? So, and I think this is what's making at least people on crypto Twitter so angsty, because BTC ETH Sol, that's the trifecta of pretty balanced market structure and operating off of I hate to call it pure, but reasonable market structure and flow dynamics, right, that are sustainable. And then the longer tail is going through a ton of volatility because it's much more perverted market structure.
People get confused still, but there's this Bitcoin narrative, this narrative, that narrative. And I'm like, stop. These are all decentralized businesses that sell block space. And they have different qualities to their block space, or a different narrative on what makes their block spaces effective. And that is, once people see that these are essentially decentralized businesses that operate and sell block space, people start to understand. And what's unique about this infrastructure layer, it's the first infrastructure layer in history that we can all participate in. Just look at the growth of the space, and it grows at 100 and something % a year, which is twice the speed of the internet, because obviously it's built on internet rails, so it should go quickly. And I just extrapolate that trend out, and I look at it, and it's like, well, it's a $2.5 trillion space today. If we carry on, by 2032, it's 100 trillion. I'm like, that's the largest accumulation of wealth in all human history in the shortest period of time. Well, my view is like 10 to 15 trillion for this cycle. So roughly in line with you, 10 would be normal. 15 would be kind of a blow off end of cycle. And we don't know what the structure of the cycle is going to be. But if you just take that rate of growth and extrapolate it out by 2032, you get pretty close to 100 trillion because the compounding of these numbers goes up so wildly. I don't care what people's philosophies are. That's not how you make money. What you make money on is owning the best performing asset on a risk adjusted basis. So what I tend to find is that the mid to upper part of the curve, which is networks gaining adoption, do best. ETH last cycle, Solana this cycle, and whoever it's going to be this cycle, whether it's Sui or whether it's Near or whatever it is, I don't know. We will see that, right? That is the easiest opportunity we get in the space to generate wealth. So firstly, focus on that. What I do now is really simple. It's idiot proof. I just put the chart against Solana. If something looks like it's a sustained trend against Solana, I'll allocate some capital to it. And again, only about 10% of my portfolio will I do in that kind of stuff. But you can make a lot of money in those. And so, that's what got me into WIF and Bonk because they were outperforming Solana. So I'm like, okay, I can do that. And now, if anybody shills me something, I just say, well, show me the chart outperforming Solana and I'll take a look.
Right.
That discipline makes it ultra easy for me because I think because of this everything code liquidity cycle, everything is correlated, every asset in the world, which makes it and it's all driven by this same debt refi cycle, which makes it, I think, the easiest macro risk-taking environment of all time. Because the central banks have also taken the left tail out by saying we can't let collateral fall too far, so we will debase currency. Holy shit, if this is the case, then we have the simplest, easiest risk-taking opportunity of all time. And I'm really, when I look at it, I'm 90-odd% Sol. Why?
Yeah.
Because the chart is outperforming Bitcoin and ETH. I mean, there's no philosophy behind it. It's like, I like Solana, love what they're doing, and it's proving it on the chart. If it doesn't prove it on the chart, it hasn't got network effects. Because you and I have talked about this. I built that Metcalfe's law thesis around this. And basically, I found that tokens are actually priced rightly. Almost everything prices pretty much according to the number of active users and the total value transacted. So in which case, price is good. But one thing I do see very clear, Chris, and I think it's the most important thing for all of us to realize, is everybody's hopes and dreams are in this. They've taken us seriously, that this is the biggest opportunity of all time. And the nice people on Twitter, the people you don't see, all of their hopes and dreams are in this. And I think that's what also drives the emotion of this space as well, is people realize there's no other thing like this. Not a job, not going to work for Google at early stage, not doing it from investing in traditional markets. This is it. And that's quite a big responsibility, I think, for all of us. What drives both of those flows is really simple. It's the business cycle. Why? Because when earnings go up, people have more money to invest.
Yeah.
And so the flows pick up. So right now, if we look at the ISM, it's still kind of below 50 and struggling to pick up. The forward-looking indicators are screaming higher. So it's about to pick up. But we're not seeing mass retail participation in crypto. Why? Because jobs are still a bit tight. The economy is still a bit shitty. People just don't have the liquidity. You know it from the VC business is nobody's had releases of liquidity, right? All the way from the stack, from private equity all the way down to growth VC, there's a real problem, except in the early stage token stuff. That's it. What I've learned over the years is if I have a core investing amount to this theme, I'm just not going to take it out. And then it removes all of this. So my entire objective is to buy the sell-off. So it kind of shifts your focus because, the highs are lower and the lows are higher and the highs are higher. So you actually just compound. If you want to keep it really stress-free, you just say, I can't wait for the next 85% correction when it comes in 2026 because I can buy more at cheap prices, and you keep compounding. The hard thing is last time around was difficult because most people's earnings were coming down. But generally speaking, you get a bit of a slowdown. But generally, if you can just inject new earnings in, you will just compound wealth, which is why Bezos and all these guys are the richest people in the world because they took one bet and never got out of it. So my particular view is don't use price, use time. If you want to take some lifestyle chips off, if you want to buy a new house or buy a new car, whatever it is, take some off at the end of this year at whatever price. And then you can run the rest. So then I try and break it down probabilistically is, okay, what does the structure of this cycle look like? Just out of interest, really. And this is what I'm using Signal from on Twitter. It's just trying to listen to everybody. People are insanely fearful of the short stunted cycle, end of the cycle last time. They're so scared of it that they want to sell earlier, which makes me think the 2013 cycle feels more similar, where everyone's going to try and take profit. The market goes down and then rips in your face again because it's not over yet. So here's another thought that I'm thinking through. It's based a little bit around your idea of a longer cycle. And again, I think this is probably more likely from technology stocks than crypto, but I think it probably applies. I think one of the paths of most pain is 2026. Liquidity gets drawn out of the system a bit. It's not 2022 all over again. People have PTSD. Why was it Bitcoin only goes down 40%?
Right.
And the NASDAQ goes down 20%. And
totally.
then we go into a bubble cycle. Because if you think of the AI narrative, the robotics narrative, the EV narrative, I mean, these are all combining into one super narrative, right? This exponential age idea is going to be ridiculous. One thing I do notice with the Everything Code is, yes, there's a lot of people who kind of understand it, but there's a lot of people who are in total disbelief. People just say it can't be this easy. Like, maybe it is. The fact that utility, in many cases, is the least valuable part of anything. If you think attention is everything, and the more attention you get, the more status you get. If you think about the wine industry, Louis Vuitton handbags, all luxury goods, right? Their utility is actually very small. I can carry my lipstick and hairbrush and money in a bag. The difference between bag pricing is attention and status. But I'm just thinking for myself, selfishly, is where do I keep long-term savings? Because you don't want necessarily the kind of optical volatility of always being in the layer ones or whatever it is. I don't want to go back to TradFi. Yes, I'll buy some real estate to use for lifestyle, but what is the thing that I'm going to store money in? I'm like, it's going to be NFTs probably.